All right, everyone, let's get started. The conversation we're about to have today, well, it isn't just about modernizing a department. It's about fundamentally re-architecting the financial engine of our entire company for the future.
Okay, let's just pause on this quote for a second, because it really sets the stage for everything. We are so far past the point of asking if we should do this. The only real questions left are how and how fast. This isn't just a project. It's an absolute imperative for survival, for agility, and for maintaining a competitive edge. So, here's how we're going to break this down. We'll kick things off with the strategic why, then we'll look at the forces driving this change and the tools we need. We'll walk through a practical roadmap, talk about the challenges we should expect, and finally, and this is the big one, we'll focus on how we measure the immense business value this is going to unlock.
All right, first up, finance beyond the ledger. You know, this is all about shifting our mindset. We're talking about a complete reimagining of the finance department's role in this company, moving it from a back office function to the strategic core of everything we do.
And this slide, this just illustrates the two worlds perfectly. Over on the left, you've got traditional finance. It's basically a rearview mirror. It's busy processing transactions and reporting on things that have already happened. On the right, that's our destination, a forward-looking strategic partner, a genuine value engine that uses predictive insights to drive better, faster decisions right when we need them.
So what's forcing this evolution? I mean, why is this happening now? Well, there are three key pressures that are making that old reactive model completely obsolete in today's business world. First, it's the demand for speed. Real-time insight isn't a nice-to-have anymore, it's an absolute necessity. Second, the cost of inefficiency is just too high. Our manual processes are slow, they're expensive, and frankly, they're prone to errors. And third, the regulatory landscape, well, it only ever gets more complex, right? It's the perfect storm, and digital transformation is the solution. Now, let's get into the how. Let's look at the core technologies that actually make this shift from reactive to proactive possible. This is the digital toolkit that's going to power this whole change.
First up, we have RPA, or robotic process automation. The best way to think about this is like hiring a digital workforce. These are bots that handle all the high-volume, repetitive stuff. Data entry, invoice processing, you name it. This frees up our talented people to focus on high-value analysis and real strategy. Next, you layer on AI and machine learning. And this is the real game changer. This is the intelligence layer that lets us move from just reporting what happened last quarter to accurately predicting what will happen next quarter. It helps us spot fraud before it hits and truly optimize our cash flow. It's a massive leap forward.
And finally, holding it all together are cloud platforms. This is the foundation. It gives us the scalability and the real-time data access we desperately need. It's the secure, accessible ecosystem where this entire digital finance operation can live and breathe, connecting our teams no matter where in the world they are.
Okay, this all sounds great in theory, I know. But the crucial question is always this: how do we actually get there? How do we execute a transformation of this scale effectively?
And the key is that this is not a big bang approach. We're not flipping a switch overnight. It has to be a structured, phased roadmap that minimizes risk, builds momentum with some early wins, and just maximizes our chances of success.
And here it is, a practical 6-step roadmap. Step 1. It all starts with defining our strategic objectives and aligning them directly with business priorities. From there, we assess where we are today, we identify those high-impact, quick-win opportunities, we select the right tech for our long-term vision, and then we implement in manageable phases. And finally, and this is critical, we rigorously measure our success with clear KPIs.
Now, let's be realistic. Any major strategic initiative is going to face challenges. It is absolutely critical that we anticipate them and have a solid mitigation strategy in place from day one.
What this slide shows is that these hurdles are predictable, which means they are manageable. Let's take skill gaps, for example. This isn't a roadblock, it's a strategic choice. We can either invest in upskilling our fantastic teams internally, or we can accelerate our journey by leveraging the deep expertise of leading finance transformation partners, companies like WNS, Deloitte, and EY, to bridge that gap for us immediately.
So this brings us to the crucial point. How do we actually prove this massive investment is paying off? Because this isn't just about getting new tech, it's about delivering tangible, long-term business value that we can see on the balance sheet.
And we do that by measuring what matters. We track concrete KPIs, like a reduced close cycle time, getting those critical numbers to the board faster. We track a lower cost per invoice,
And importantly, we track improved forecast accuracy. Why? Because better forecasts mean better capital allocation, a smarter strategy, and ultimately, a much stronger bottom line.
You know, when it's all said and done, this is the end goal. This entire initiative is about so much more than efficiency. It is about fundamentally redefining our finance function, transforming it from a back-office support team into a powerful, proactive, strategic engine that drives the entire business forward.
So I'll just leave you with that one final thought. Right now, is our finance team acting like a historian, simply reporting on the past? Or are we ready to empower them to become the architects who are actively building our future? Thank you.